I'll go ahead and mute everyone just so we have.
Okay.
And then Ruta, if you can unmute yourself, because I've muted everyone just so we don't have any background noises.
Oh, okay. Good. So yeah, so we as I was saying, like there's the funding gap. So as the companies kind of approach B2C rounds, there's really limited capital in Europe. And a lot of these companies are forced to look to US for funding, but that might be too early and not as cost efficient, or it doesn't make sense. So that's why we invest in local companies, keep them locally for as long as it makes sense, and eventually help them come to US. So I guess that's a quick summary of what I do, and happy to later answer any questions or continue our discussion. So maybe Garrett?
Ačiū, Ruta. Gytis Garrett Vygantas. I was born in Chicago, first generation Lithuanian American. Went to the East Coast for my scientific training, biochem undergrad, MD, MBA from Georgetown, and then University of Pennsylvania for my residency before taking all my academic medical knowledge and joining industry, initially at Genentech, which was acquired by Roche. And then I got pulled into the venture capital and startup ecosystem here in the Bay Area where I'm based. So it's on the earlier side here. I apologize in advance if my kids come in here on their way to school to say goodbye, but I'll do that. I'll mute myself in that case. And looking forward to hopefully seeing some of you in Boston. That should be an exciting time. What else can I share, Karle? Should we move to the presentation before we introduce Juozas?
Why don't we do that? Actually, Juozas, maybe a quick intro, and then I'll do the housekeeping stuff.
Okay.
So it's great to be on this webinar. As it says on the slide, I'm the CEO and co-founder of Atrandi Biosciences. We're a life sciences tools company, meaning that we build devices, consumables, chemicals, and then reagent kits, and enable single-cell research, really at the cutting edge of science. So working with most universities across the globe and most pharma and biotech companies, more on the research side than translational side. As was mentioned, I'm here on this call because we recently raised a $25 million Series A round that was led by a tier 1 US investor, Lux Capital. That's not the only funding that we have raised to date. I think with grants combined, we're somewhere close to $33 million raised, and it has certainly been a journey. So I'm excited to sort of share our journey, and hopefully you'll find it applicable to your situation.
Super. So just real quick, InnoHub, I think most people that are joining already have heard of InnoHub or are familiar or are members. So thanks for joining. It's a project that was launched early in 2024. And really, in short, we're outposts for Lithuanian startups and Lithuanian scale-ups in the Bay Area. Diana and myself are the key folks over here on this side. In Lithuania, we have a bigger team that supports us. As far as kind of what we do is we do things like this webinar. So we educate. We have a mentor network that we continuously build out and match companies with the right mentors in the US. And then we also explore what are all the different resources that we can get to connect the companies with in the US. So different soft landing companies and so on. And the whole goal of it is to mitigate risks. It's really expensive and time consuming to expand to the US. There's a big time difference. It's pretty far to travel. And so we try to minimize some of those risks and help companies succeed. So thanks for joining. And myself and Diana have each about 25 years of experience in the US. And we're excited to be working on InnoHub and excited to have this tight connection with Lithuania. We're both born there, and it's an honor to be doing this kind of work. Just real quick, there's a North American Lithuanian Business Forum coming up in June in Boston. which is a week before the Bio International Convention. And both events will have pretty big group of Lithuanians attending, both from the US side and from coming from the homeland. So I highly encourage you to check out NALB forum. If you Google it, you'll find it. We might share a link in here too. And before that, towards the end of May, on May 22nd, we'll do another webinar on some like cultural differences, which I think is a good primer before coming to the event, and some things to keep in mind. It's more about the forum. And so now on to Gytis, to you.
Yeah. Ačiū, Karli. Yeah, it's great to be part of InnoHub. So many opportunities to speak with and connect with entrepreneurs based in Lietuva, and exciting to see how they develop their companies. Next slide. So Riverine Ventures is slightly different than where Ruta is. We are more focused on US based companies. We're a small fund. We're hoping to follow in the footsteps of our larger colleagues like Lux Capital. In fact, that's, as Carlos mentioned, was part of the genesis for this webinar here. I was at a holiday party with David Yang from Lux Capital, and he just asked, "Are you Lithuanian?" And I said, "Yes, in fact, I am." From my name tag, he could tell. And so I was like, "That's impressive that a scientist here in SF could pick out my name." And he goes, "Oh yeah, we're actually investing in a company in Lietuva," and I got very curious because typically you don't hear about stories like that, and all of us investors on the early stage do share opportunities and talk to each other about what's exciting and what's in our portfolios and our pipeline. So it was great to hear this story that David started describing, and then that led to bringing Juozas in, and he's got a fascinating journey and how he prepared for this day where he is now, and what his vision is for the future, and how he articulated and communicated that with his investors and his customers as well. So we at Riverine Ventures hope to, as I mentioned, be part of that ecosystem. We've raised our first fund, 40 million. It's performing top decile. That means out of the 15 investments we have, we've already sold 3 of the companies and returned half the fund so far. So we're out in the market raising our second fund. Unfortunately for biotech, it's a very challenging time. A number of the macro conditions are influencing depressed valuations and a tremendous slowdown in fundraising. So companies are required to do more with less, and those that come out of this are probably going to be better positioned to succeed in the long term. So as investors in this space, we have to also be even more disciplined in our approach and how we evaluate companies. So I thought to kind of give some context in how, as investors, we review the hundreds of plans that come across our desk and surface, the top ones for further diligence. I thought it might be helpful to kind of give a quick overview on how we do it at Riverine Ventures with our 5 M's as the categories that we evaluate companies on that first screen. So first is the market, followed by management, third moat, fourth momentum, and finally money. On the market size, it's important to have a pretty firm grasp on who your customer is and how big that pool of available addressable customers are. And as we look a layer further, is that market growing or contracting? How crowded is it as it relates to competitive and substitutions? And what are the M&A dynamics? Is it a company that's being active, or that a space that has active acquisitions, or are the acquirers few and therefore have more power in the equation, more leverage? So that's is an overview on the market segment. On management, we often look at who is running the company and how well suited they are to tackle the milestones that are critical for the company's success. So if it is a first-time CEO, what's been the career trajectory of that individual? has he or she surrounded himself with advisors and other founders that supplement skill sets that are required for that company to succeed? And then we'll do the hard work of asking, other folks that have been in that orbit of the management team to give us their sense on, the capabilities of that individual. So reference checks, informally and formally. Third is moat. So it's important for us to evaluate pretty quickly what the competitive barriers to entry are. Does the company have a rich IP roster, protecting it from early encroachment, ability to operate freely? Does the company have a regulatory pathway in front of it that it can elucidate, articulate what their steps are to gain approval? And then is there a business model that enables, again, further barriers to entry? Is the product reimbursed? Or in a software setting, do we have multi-year contracts that can give some additional protection? Fourth is momentum. How much has the team accomplished in what amount of time, and how efficiently with that capital? I think you'll hear with Juozas' story, we all hear the big headline, the 25 million Series A raise. But what was fascinating for us to learn when we had our discussion before this call was the events that led up to that larger event, that catalyst event. Juozas took money along the way, preparing the company to be ready for a larger investment. And then last and probably most importantly for this call, capital. So how much capital is required to achieve the most significant value driving milestone, which should enable continued investment or interest from other investors to even look at the company in this hyper competitive time that we're in right now. And then as syndicates that we tend to join, we're a smaller fund, so we often have to pass the hat around with other VCs that we hope to have larger pockets than us, so deeper pockets than us, helping companies get through periods of slower growth or even contraction in the market, to weather those storms, and to continue to give the company a chance to turn profitable. So those are the categories that we evaluate our companies pretty quickly on. I think the more fascinating part of the story will be to hear how all of these came together for Juozas. And so I will turn it over to Carl and Juozas. You guys can go through the Atrandi story and take it from there.
Yeah, sure. Great segue into I think what you mentioned already is like how I think maybe to kick us off, Juozas, you can share like how what was your initial vision and how it evolved over time, because when we did the prep call, I think that was really fascinating, that it was important to have this vision and it was important to choose what kind of investment or what kind of capital you need, and that there's different ways for a company to pursue their future. VC is not the only way, and I think some of the thoughts you shared, I'd love for everyone to hear that.
So I think one thing that I sort of realized looking back, and when we founded the company, I was sort of a bit naive and I thought, hey, found a company, so we have to go down the route of VC funding, and that's just how we do things. But in reality, funding is a tool to realize the vision of the founders, right? Because at the end of the day, no matter the funding type, you're ultimately typically selling part of your company. So it's something pretty hard to give up, and you have to be sure that you're doing it for the right reasons. And so when we founded the company, and that was actually 9 years ago, so quite a while ago. For the first couple of years, we didn't necessarily sort of do that actively because we just didn't know what we really wanted to do. We founded the company from a sort of single cell research space, which in 2016 was really just starting, and we were at the very forefront of research. And thought, hey, there's clearly going to be some opportunity for business here because this is going to take off. So there was this fundamental belief that single cell is going to be valuable. And then the more we thought about it, the more we realized that for single cell to be broadly useful, not only in research, but more so sort of in diagnostic and translational context, the technology stack needs to mature and evolve. And initially, we started from developing instruments for existing technologies, sort of tried to make existing technologies easier for non-expert users to adopt. And this is particularly droplet microfluidics. So I'll not go into technicality, but we started there, and we raised our first funding sort of off the back of that idea that we need to make existing technologies more accessible. And as we were floating this idea around for sort of other investors, and this is here just a side note how important it is to have conversations with not necessarily only your customers and your partners, but also investors, advisors, just really anyone you can have a conversation with, even if you're not raising money, because it's outside perspective, which is valuable for you to understand where your business can go. And so we actually went to BioConvention and all of these things quite a while ago. And as we were building our business based on instruments, we realized that there isn't so much scalability there. And it was always our ambition that we wanted to build something very big, big both in terms of impact, sort of we wanted to enable better science to be done, and big in monetary outcome, meaning that we want to build a company that can be sold or listed on the stock exchange for large sums of money, because that just seemed cool to us when we found the company. So we're still sticking true to our idea. And as we crystallized what we wanted to do in terms of impact, we realized that we need to innovate in a more fundamental level. And this is where we actually raised our second investment. So we have gone through 3 investment rounds. The first investment round was done locally in Lithuania. So it was a 1 million euro investment, so about $1.1 million. And the second one was done by a leading VC, deep tech VC in Europe from Germany, Riverine Ventures. And they invested around 4.5 million euros, so around $5 million. And the idea there was to finalize the development of a breakthrough technology that we had in our lab. And we did so successfully. And then we always knew that the biggest market in life sciences is in the US. So there's no way around it. US is the ecosystem where all innovations go to prove themselves. So we're always, really from day one, very diligent about expanding into US and accessing US customer base. And so with the sort of late seed funding that was led by the German VC, we went into the US ecosystem. We sort of started selling to US customers, started refining our product, and then we got to a stage where we felt confident enough that we want to really go big. And this is sort of the current Series A round, is really us going down the path of ambitious goals. And here I'll sort of want to take a moment and share my perspective and really then hear from others on a call, because I think it's important for founders to realize that big rounds come with big risk. And as Carlos just pointed out, it's not necessarily the right fundraising mode for companies, right? Because it depends on founders' goals. If you, for example, want to take a less risky, more secure path, but you really see a very specific problem that maybe doesn't have such a big market, but it's an important problem that needs to be solved, well, maybe then you don't need to raise a $25 million round from a tier 1 VC, which then expects that the company will be sold for billion of dollars at some point, which clearly is very risky. So in our case, our vision remains true. We want to disrupt the sort of life sciences tools ecosystem in a big way. We understand that there is a risk, but we're committed to that path, and that's why we sort of from day one very methodically approach the fundraising journey from going bigger and bigger with every step. But maybe Garrett or Ruta wants to sort of add on the different types of VCs and different types of journeys for companies.
Yeah, Ruta, go ahead. I think from your perspective, Ruta, you guys are more growth stage, so you may have a kind of a different view than we do on the Series A early side. So go ahead.
Yeah, and I guess, and to build on what Juozas said, and Garrett, I think one of your M's is money, and eventually, that's what venture is here for, right? Is to provide you money and hopefully also some operational and strategic advice as well. But I think it's very important to know what it is you're looking for and what your strategy is. I mean, I can't tell you how many business plans we get, and people are saying they just seems like they pull it out of the air. I mean, I'm looking for 5 million or 10 million or 25 million, but to me, it's not the amount, it's the why. And you need to have a very good kind of plan, like what is the money for and what does it get you? As a venture investor, I'm looking at you know, at the next stage, or what is my exit opportunity and what is the next stage of the company. So, if you need 5 million, what does that get you? You need to prove to me that will get you to a particular milestone. If you're just telling me you need 5 million to get through the next 2 years, that is not something that a venture fund will look at. If you're telling me you need 5 million to get me the FDA, well, you won't get FDA approval for 5 million, but to develop a prototype or to get to this stage, like that's what's really important. And I think it's what I find when I get these business plans. It's always like one of the critical things that is really missing. So to be very thoughtful about where that money gets you, and and then you kind of backtrack into how much money you need, and you want to raise enough to get you, and obviously you don't want to raise too much, as Juozas said, because you do give up a significant part of your company as well. But then, and you also do want to find a venture fund. I mean, it's a dating game as much as for you as it is for us, to find a fund that has your kind of the same vision, that you guys share the same vision, and that can help you with their advisors team and kind of other resources that are more than just money.
Yeah, for us, we look at companies in the therapeutic space, the software space, and the hardware space. So each one of those categories has different dynamics around it. Clearly on the therapeutic side, you're not going to be bringing customers in. You're very focused on de-risking preclinical and clinical development, and that's what you fund to. So that's the path for companies on the therapeutic side. Those dynamics are a little bit more binary in nature, the outcomes there. So you have to really have a deep understanding of the players downstream that are likely to be the commercial partners. So the commercial partners, large pharma, can offload the development costs of the expensive later stage studies, but also be the likely acquirers of the asset or the company. So how well can you articulate that? We always underwrite to a kind of a conservative 6 to 8 times return on our investment. And so if you look at it across 15 companies where a third we expect to fail, the remaining 2/3 have to outperform our underwriting target. So that requires us to come in slightly earlier. If you look at average sales multiples, actually they're all over the place based on which sector you're in. So it's hard to extrapolate that across sector. But the point in the discussion is, when you take on more capital, such as Juozas 25 million Series A, those investors also are expecting a pretty large return on their investment, a multiple on their investment. So the universe of buyers changes there too. Who is able to acquire the technology, at what cost? At what cost are the investors and the management of that company willing to transact and turn over? Managing the company and the project to other external players. So that's a consideration as well, and that kind of shapes how we as investors think about, okay, is this company more likely to go public for us to be able to obtain our targeted return, or is this a trade sale to a larger strategic? How active is that strategic in the space? So on and so forth. So all those things happen in the background while we're hearing the story and evaluating the product.
I wanted to like zoom in a bit. Like Juozas has had a unique situation where like the US investor found out about Atrandi through customers. So it's kind of like a nice, unique problem to have. But thinking of like other founders, you know, in Lithuania, maybe folks you spoke through as a mentor, or you know, from your experience, what are some ways? What are the strengths that they should lean into, or ways to like overcome the fact that they're like in Europe and, you know, there's everybody knocking on VC's doors in the US, and like you said, you're getting tons of, you know, memos and like, hey, we you know, we're raising this, that. What specifically could you kind of recommend to the founders in Lithuania that are thinking about raising from the US investors?
That's for you, Juozas.
Oh, that's me. Okay. No, I was just thinking in my head. So it's, you know, we ended up going with Lux, and that was the intro there came from the customers. So, you know, good for us. We built a product that our customers loved, but we were pretty methodical about it because we always knew that we do want a US investor. And a side note here, I think, you know, a key difference between European and US investors is the level of ambition that is expected. And what I find in my, you know, when I look back into my own journey, is just really convincing ourselves as a founder team that we believe, truly believe in the big outcome that we're trying to build, was one of the sort of key moments for us to really take the step to go into the US market. And if we were to do it without that belief, and because you can only truly pitch your company if you believe in what you're pitching. And so if you don't believe in the ambitious big outcome, then likely you'll not be interesting to most investors in the US, because as Garrett said, the big multiples are often realized when the ambition is, you know, sizably big. So you cannot expect to sell your company for, I don't know, 10, $20 million. That will not be interesting to a VC investor. That might be a great outcome for you as a founder and as a founding team. And there are different ways to finance those companies. But if you go down the VC route, and especially in the US, you want to have a big vision. And so once we formulated the vision, once we understood what we want to do, then we really pulled sort of a CRM of investors. We went to our existing investors, went to our advisors. We asked for warm intros. I think we had close to like 60 funds on the list. And these are all funds that sort of we knew how to reach. Out of those funds, around 30 responded. So, you know, 50% of a CRM just didn't even respond, even with warm intros. So that kind of shows the competitiveness that there is. And then we had, you know, conversations with, deep conversations with about 10 funds. Out of those 10 funds, we moved into sort of even more serious conversations. So really due diligence with 3 funds. So, you know, out of 60, we ended up with 3 that went into due diligence. And at the end of the day, we got term sheets from those 3 funds. So, and then we chose the one that, as Ruta said, we found, you know, the biggest match in the belief in the vision and the way to reach that vision. Because again, there are sort of multiple ways to arrive at the same point. For example, you can raise, you know, a lot of money and you can try to do everything yourself. Or you can raise some money and find a strategic partner that'll sort of, you know, absorb maybe your company, but you'll be still part of a team going through the journey, and you'll arrive at the same point, and, you know, maybe even faster in some cases. So, but in our case, we found the fund that, you know, our beliefs in the end point and the journey to it align, but we're very methodical. So I would say that it was, you know, we succeeded because our customers introduced in that particular case, but on the other hand, we did have a lot of conversations. Those conversations are not only useful as a fundraising tool, but also it's a tool that allows you to really validate your business case. Because all these you know, conversations with VC investors, they're a two-way street. Whatever you're pitching and the questions that you're getting, these are not random questions. Investors understand the market, they understand the competition, and when they ask the questions, you should listen and really react to them in a proper way, meaning that if somebody asks you, you know, to name a competition and you can't name 2 companies and they say, but there are 5, well, then you're maybe missing something. You should go back to the drawing board and really understand the space that you're in. So, so that whole process took us about sort of 6 months or so. And it's really a full sort of focus of a management team, because you have to prepare for those calls, you have to prepare materials for due diligence room. So it's not something to be undertaken lightly. But I think one of the steps that can help founders, and this is the topic for today, is how founders can be sort of ready to raise funds in the US, is to have those conversations with US investors as early as possible. Because as I said, it's enlightening to understand what is required from you. And European mentality and European investors, they sort of see the world a bit differently. Less aggressive maybe is the right, or more sort of risk averse is the right term. And so, going to conferences and going to forums, it's a great place to look for partners, but it's a great place to sort of get feedback on your business case and on your business pitch. And sort of Garrett and Ruta can chime in, but I'm sure that you're happy to chat with companies that are not necessarily raising right now, but might be raising in the future. And so it is like a dating game, and then people, invest in those relationships.
Maybe just to add, and then a follow-up question to yours as well. I mean, what we found, and the reason why we invest in Europe, because then I think the valuations are to us much more attractive there versus US, is because most US venture firms will not invest in a European company. They I mean, especially in Boston, they barely cross the street for a board meeting, so they do require these companies to have headquarters or some significant presence in the US, or have a team. What we find a lot of times, these companies, when they raise, they're forced to leave, Lithuania, for example, too early. And because it is still much more cost effective to be in Lithuania, to have your R&D in Lithuania, etc. So I guess, and Juozas, maybe you can add, like, how did you have to change your company structure, or kind of logistically, did you have to make any adjustments to take in the VC money?
Oh yes, I'll respond to that before we sort of move on to a different topic. So for one, we were very purposeful from day one when building the company that we wanted to operate in the US. So for a while we had a US subsidiary, we had a US team, and the founders are making regular trips to US. So sort of literally at any point there's somebody in the US from our team. So we're we don't live there, but we're present there, visiting customer sites, visiting conferences, etc. Now yes, investors don't necessarily like investing outside of their comfort zone, but it's also, you'll probably all agree that when there is a good opportunity, you'll invest because it's a good opportunity. There are obviously logistical things like where do you want to park the money? Is the Lithuanian, and I see there's a question in the chat, is the Lithuanian entity a good place to park the money? And it'll then really just depend on the fund. I think there are funds, and I have now funds that invested in Lithuanian incorporated entities without big problems, and these are US and sort of global funds. There are companies that were required to do a corporate flip into US or other European entity. UK is a sort of attractive ecosystem to do that. But I think it's all really sort of details, and you shouldn't start your fundraising journey questioning whether me being in Lithuania is an attractive place to be in. I think, as Ruta, you said, you need to think of what makes sense for your business. And if it makes sense for you to be in Lithuania because the cost structure here is very supportive of product development, then keep your product development in Lithuania and start building the US sales organization. And maybe that's all you need to do. Maybe you need to go through FDA because all of the market is in FDA, and from day one you should incorporate in Delaware. It's super easy to do. You can do it, like $5,000, and the lawyers will just take care of everything, and you'll have a US entity, and you can still do sort of all of your research in Europe, in Lithuania, or elsewhere. So I would say these are sort of secondary things, operational details that you have to have an answer on. But all US and not only US, all investors invest in a business case that has a big potential outcome. And you as a manager of your company should understand the path to that outcome, should understand the risks and have a plan to mitigate those risks.
Juozas, did your vision evolve over time, or what did you kind of set out as, like, I have this grand vision to be $1 billion company?
So interestingly enough, we set out to be a grand vision $1 billion company. We said we want to change how diagnostics is done. And then we were hit with reality, and we're like, okay, maybe this is a bit of too ambitious goal. But before the Series A round, we realized that, hey, we actually have a technology in our hands which can be massively impactful. So it was sort of the cycle. And as I said, we had to really sort of convince ourselves as founders that we do really see a pathway to the end goal. And so we started with this naive idea, and we really didn't see the path. We just thought, hey, this technology is cool. It must have use cases, all over the place. But the more we work with customers, the more we work with product, we realize that we now sort of know what steps and what events and what milestones need to be achieved for us to get to place to where we are. And I think this is sort of what made us really ready to fundraise, is this understanding of a journey. And as I said, it's not a sure thing. It doesn't have to be a sure thing. It's still early stage investment. It carries a lot of risk. But it's this, sort of understanding and belief that exists within the company that I think is very important for the investors to see.
Gytis and Ruta, maybe you can talk about where, a founder from Lithuania, you spoke with them. What stood out? Like, what are the things that you noticed that they need to overcome or address when speaking to a U.S. investor?
Yeah, I'll start first, Ruta. So I agree. I think I forgot who said, maybe Juozas, it was you. Get feedback from investors, early in the process. It's actually easier for me, and I'm more, willing to take meetings if in the intro line, the message is, hey, we're not fundraising right now, but really, wanted to get your take on our go-to-market approach, wanted to get your take on our, strategic differentiation. That actually is a disarming, way to get investors to, take that call, without leading with the ask, right? So do that, leverage that as best you can. And then those warm relationships are also critical. So getting intros from other people that are in your network are much, more high yield than cold calls in and of itself. InnoHub is actually a great warm network, or a warm intro network. The next thing, as Juozas was saying, was be very prepared in understanding how much money you're raising, what milestones you achieve with that money, how does the company look like after this round, but also what could it be, if everything works out, how do you envision this company, competing in the market in a bigger scale. So, as investors, we will discount, the forecasts, and we'll discount that vision, based on the risks that we understand. But you have to be able to be very prepared and understanding what you need to do initially to tackle, the next 2 years, as it relates to, the milestones you need to achieve, and then how that prepares you for the next fundraising round or growth, growth stage of the company, where you don't have to take in as much capital and you push towards profitability. So, all those things, we'd like to hear in the conversations we have with even early stage starters. That helps us really get our heads around, does this leader understand the market? Of course, understanding your own product, that's table stakes. You have to, know the ins and outs of what, the why and the how your product works. But the market, the place where the investment dollars are going to be used to, battle the competitive forces, those are the questions that we are evaluating. Can this leader get us there? Recognizing that I've been an entrepreneur of 3 companies as well. It's not a straight line, as anyone will tell you. There are, peaks and troughs of success and emotion. You could be very excited one day and very depressed the next, as we, go through this early stage journey, to get to more of a steady state. And even in that later stage journey, it's not always a steady state. So the third thing that I'll comment on was the follow-up is so critical. So how many times, there were a few times where we spoke to companies, and kind of said, well, we'd love to see, this, come back to us when this has been achieved, or, give us an understanding of the competitive dynamics in your market. That's an opening for you as an entrepreneur to stay engaged with the VC. So use those hooks, those openings to your advantage to stay in front of investors. It's harder to get them to say, actually it's great if you get it to a quick no, but the ones that are not giving you the no may actually be interested and want to continue diligence. So continue to find ways to stay engaged with those investors and update them on your progress and reinforce the vision that you're setting out to accomplish.
I'll quickly underline, I think what you said, that investors discount your story. What we've noticed with a lot of Lithuanian founders through InnoHub is that Lithuanians tend to discount already their own story. And I think that's like a really big thing that you have to change if you're going to talk to US investors, is don't pre-discount, draw on the bold vision, like Juozas was saying, because investors will inevitably discount that. So if you limit your own options and you're like, well, for now we're just focused on this smaller niche and we're not, no, you have to kind of paint the vision of how you go from the small niche to the bigger niche to the really big market, even if it's a bit of a stretch. I've noticed that we tend to do that, and it's just maybe a cultural thing where we're humble and hardworking, and kind of gets in the way of us painting that vision.
Yeah. I mean, I'll second everything Garrett and Carly just said. Yeah, I definitely have ambition and believe in yourself, and and you need to have global ambitions, right? Somebody asked, if the company's based in Lithuania. Look, if the company's based in Lithuania and is only going to dominate in Lithuania and be focused on Lithuanian market, then certainly that will never be attractive to US investors. So they will look at something who's looking to expand. And yeah, and same as Garrett, I mean, we look forward to building relationships. I would like to start building relationships with a company early on. As they say, you need to raise money before you need money. So start building those relationships ahead of time, and we like to follow the companies, and also we build relationship with local investors, whether it's angels or early seed venture funds, because when I look at a company, I want to make sure that somebody in the local market trusts them and believes in them, as somebody in the local market invested in them. Like Juozas was a great example. He had Lithuanian investors and he had European investors. So as a US investor, I'm like, okay, he's proven himself in his home country. He's proven himself in Europe. I believe in his story. But if you cannot raise any money in Lithuania, then it's hard for me to buy into the story as well. If you have no local supporters. Yeah, and we always, I think, same as Garrett, we always partner with others. We're never just single investor.
True. I think we have about 10 minutes left. Maybe we can turn it to the audience if anyone has questions. Now would be a good time. And don't be shy.
Absolutely. So I'm Juozas, CEO and co-founder of SenseMetry. So we are a deep tech digital engineering company, building a SaaS product and already having significant traction, and the majority of it is in the US. And our dilemma is, again, how to, raising investment. So far we've been bootstrapping for 5 years and building up the company that way. But for a scale-up phase, attracting investor is being considered. And this question, is it in Lithuania? Do we have to re-register in the UK? Do we have to re-register in the US in some way? And what are the different pros and cons, when thinking about this, and how different people who already been speaking see the situation and attractiveness from the investors. So maybe from our sort of immediate, sort of UK is more attractive because it's closer, and we have good also connections beyond this legal base. We have a big R&D network there as well. That's attractive, and it's easier time zone wise. But the US, is the bigger market in itself, and of course it's easiest to stay in Lithuania and do everything in Lithuanian sort of legal base, but that's not very attractive for both investors as well as employees who would be needed from outside Lithuania to understand what stock options mean in this small country legal system. So it would be interesting to hear your thoughts on the sort of the legal establishment importance.
I think, and yours, I think, said it too. Once you start negotiating with the VC, that can be addressed. I mean, I think any U.S. investor will want some sort of U.S. presence or a vehicle that's safe to invest in. But I mean, me personally too, when we look at deals, I want to make sure that it makes sense cost wise, right? If the company comes and puts up a headquarters here in Cambridge, Massachusetts, and $1 million, burns through a year just basically on on salaries and rent, to me that's not attractive. Like I would rather put my $1 million in Lithuania, where I know that's going to go a really long way towards product development. So, there, I mean, there's a ways to address. I mean, you can always put, a shell company in Delaware or something, and that's fine. But I would keep the development and kind of your employees and things, most of it where where there's a talent pool and where it does make sense cost wise.
Yeah, I'll just, from a practical standpoint of view, US is an expensive place to deal with legal things. So be mindful of that. And the laws are quite different. And so if you have a US company, and you plan to keep your workforce in the US, it just doesn't make any sense. In Europe, it just doesn't make any sense. If you have a group structure that's based in US, then taxation will be difficult to manage. So I would say avoid complicated structures for as long as possible. And if you need to do them at some point, you'll find a way to do it. But UK actually is not a bad place to have a company, because I think most investors are pretty comfortable generally with UK based, especially early stage investors. There's a lot of funds based in London. A lot of global funds operate sort of an office in London. As you said, time difference is reasonable, and there's a lot of engineering talent in UK. So it's not a bad thing to consider. Just sort of understand the legal base a bit better before jumping in.
And I see a question in the chat too. What is the likelihood of US-based investors investing in Lithuanian-based LT incorporated startups? If anybody wants to answer.
Yeah, I'll take that. I think it has to be a unique situation. I mean, this Juozas, said it perfectly. Lux saw the bigger vision, that the geography wasn't as important as the product and the product market fit, as well as the other factors that they evaluated. But on one hand, it's usually the larger funds that are more willing to take on that additional risk. They see it as a risk. If it doesn't pattern match, what we see in 80% of the investments that we make, Delaware Corporation with a U.S. board, U.S. laws, we understand, if you have to lay off a department, a division, what your obligations are to that, side of the house, and how to, forecast that. Most smaller funds that aren't global, so I would say that's 75% of funds aren't global, and less willing to take on that compounded risk. They'll look at it that way. That does limit the opportunity set. So you're somewhat forced to, just as it worked out with Juozas, prepare with smaller financings along the way, refine your story, refine your vision. Smaller financings come from more local VCs, grant money, European VCs, and then you'll access the global US VC market when you're at that scale where it matches up better with their capabilities and their capital allocation strategies.
Yeah, and maybe an unpopular opinion, but if you're still very early stage, and you think that Silicon Valley is the place to be because all the talent and the capital is there and whatever, you might as well consider relocating. So, really have that discussion with yourself and your founders, and understand why you're being where you are. If you're staying in Lithuania, then why? Is it because every dollar buys you sort of $5 worth of talent? That's good. First talent in Lithuania. Is it because I don't know IP law is better in Lithuania for whatever reason? Is it that employment laws are better? There must be a clear reason. Because as Garrett said, realistically, most of the startups come out of Silicon Valley, and there is a pattern there. So, ask yourselves why you're doing things differently. And it can be patriotic reasons as well. It doesn't need to be all sort of very rational and very business driven. You might just not like living in the US. Some people don't, especially these days. But so just, kind of, I think everything, a lesson for me is that every decision has to have a context. And it cannot be that investor asks you sort of why you're doing this and you say, I don't know, it just happened so. You should sort of analyze every step along the way and ask yourselves, why am I doing this?
Amazing. Unless anybody else has a burning question, we're at the hour, so I want to be respectful of everyone's time. Juozas, congrats, and we're all going to keep an eye on you and root for you, because I know that this is just the step. This is just the step in the direction, right? Like you said, the fundraising is not the end goal; it's just the means to the next step. And so, I'm excited. I think this is probably the biggest biotech investment into a Lithuanian company from US, and being InnoHub, we're particularly focused on the US and Lithuania partnership. So we're excited to keep an eye on you. Thank you, Ruta and Gita, for your insights. I know you're open to connect with companies and through InnoHub or just directly and mentor some folks. So that invitation is on the table, I believe. And yeah, I'll just post in the chat for the NALP forum if anyone's planning to be in Boston, or if you don't plan to be in Boston, there's a good reason to come in June. So thanks everyone for the time. Any last parting thoughts from anyone else?
We'd love to meet you, or most of you, in Boston.
See you in Boston.
Yeah.
See you in Boston for the tea party.
Thank you. We will. Bye-bye.
Bye.
This time, you can.